Boom! At the open, all-time high for the S&P 500.
It's your boy Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up happen.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I want to turn on this. Becky quick. While the average man looking at it's sad like she fine as yeah. I'm over here looking at tails and whips like yeah, 5'6". Yeah, I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-Wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater. Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, open up some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, making profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them make profits. While I'm still in my same making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? Make profits. Hey, Shug, Mike, what we doing? Make profits. Yo, Wolf, Professor, what we doing? Make profits. That TTG money gang. Making profits. We some snipers.
Hey, yo. What's up, guys? What's going on? Switch it up there for you. What's going on, everybody? Welcome to the True Trading Group live stream. I am with you live from the Aria in Las Vegas on another red day in the overall markets. The stock market crash is, in fact, continuing. We made fresh new lows on the year in the Dow. Not quite there on the S&P and the NASDAQ, but we are approaching those June lows, and we're approaching them here pretty quickly in the final hour of the trading day. We'll see, guys, if we actually do get down there and get to the brand new fresh June lows. The June low on the SPY is 362.17. We are currently trading 364.85. Thanks for joining me for the final trading hour of the day, the final trading hour of the week. What a week it's been. Big move to the downside after the Fed meeting. I told you the Fed meeting was going to be a major market moving event, and did it, and moved the market. Boy, did it ever. Man, a big week in chat for us, guys. I don't care that the markets are moving to the downside. We've had a big week inside of chat. A lot of big trades, Tesla, Sava, SPY. I mean, just a lot of stuff going on in True Trading Group. I'm excited to roll this out and to finish out the final hour with you all. My name is Michael Edward. Welcome to the True Trading Group live stream. I'm a former award-winning hedge fund trader and now the current head trader at True Trading Group. I've been trading and investing for over 16 years, began my career working at a fund in New York City. It was my first job out of college. Then 2008 happened, and that was the Great Recession. That was the financial crisis and the worst stock market crash that most of you have ever lived through. Now, though, folks, during that same exact time period of 2008, I didn't just survive, but I thrived, going on to receive one of the firm's Trader of the Year awards. And today, I'm now the head trader at True Trading Group, and with my team of 9 other professional trading moderators and an over 20-person staff, we have helped thousands of traders from all over the world and from all walks of life learn to trade and profit consistently. TTG is now the fastest growing and highest rated premium online trading educational platform that combines university level trading and investing courses with premium stock market tools, workshops, and mentorship on stocks, options, futures, crypto, all styles of trading, including swing trading, day trading, and also long-term investing. TTG, we take with our platform with True Trading Group, we take our university level of educational curriculum and we combine it with today's top trading and investing tools that are worth well over $5,000 a year. We give you access to around 10,000 TTG members that are the most educated, supportive, helpful, and successful community of traders that you are going to find. And of course, you're going to get all of our real-time trade alerts from myself and the other 9 professional trading mods that have been able to maintain a cumulative win rate of just around 80% for going on the last 2 years. We're a family at True Trading Group. We leave no trader behind. If you are new to this channel, make sure you subscribe. Make sure you smash that like button. Make sure you share this stream on your own social media. Let's reach out. Let's educate and empower as many retail traders as we possibly can. It's been a really awesome day for me here inside True Trading Group, guys. Not just with what's going on here in the overall markets. And, I've been telling you guys now for the last couple of weeks that I think that there's further downside in this market as you get back into the second half of September. And I've been talking about that now. And ever since the Fed meeting came out and the Fed moved their Fed funds target, you got that move and you're getting this move. You're back down and testing those June lows. But I am starting to see some indications on a technical basis that for the near term, that the markets are a little bit oversold. I do expect our next kind of bear market rally. We've had a lot of these bear market rallies over this entire year where we've had these 8, 7, 9, 10% moves off of lows. And I think you're due for another little bear market rally here. I think at some time next week, you're going to get a little bit of a bear market rally, but I'll get into that a little bit more later on in this live stream. But today was a really important day for me. Okay, earlier today, in case you guys missed it, I had the privilege and honor of interviewing CNBC's senior economics reporter, Steve Liesman. Okay, so for those of you, if any of you watch CNBC, obviously, as you can see, I watch CNBC all day, every day, whether I'm in my home office, or, I'm traveling. Like I said, I'm at the Aria right now in Vegas. That's why you don't have my typical office background from my usual live streams. But it was just a phenomenal interview. I mean, I want to just give another big thank you to Steve on a day like today where there's so much going on. The markets, are in crash mode. We're heading down towards June lows. Yet a lot of different actions be taken by a lot of different central banks around the world today. There was a lot of news going on, and he was able to take about 30 minutes of his day to pop on the live stream with me so I can ask him a bunch of really, really crucial questions. And it was just a lot of fun. I want to thank him again for coming on and talking with me and the rest of the TTG community. It means a lot to me, it means a lot to the fam and the viewers. And I hope that you guys got value from this. Hope you got value from this interview. But and in just a moment, I'm going to play, some footage from that interview in case you guys missed it. But I do highly recommend, okay, once we're finished with this live stream today, the markets, we did get a little bit of a bounce there in front of those June lows. So we'll talk about this. But once we're done with this live stream, if you missed the live stream from earlier today, I highly recommend you go back and check it out. It's only about a half hour long. But I would go back and check out that interview. Was really awesome. It was a lot of fun. It was a lot of fun for me to do. But he reiterated and confirmed a lot of the things that I've been telling you. Like my theory here on the big picture on where this thing goes. If you had asked me, a month or two ago, Mike, are the June lows safe? I would have said, yeah, most likely, yes. But the Fed changed that on Wednesday when the Fed moved their target for the Fed funds rate. And then that was during my Wednesday live stream. I told you guys that those June lows are now in jeopardy because of what the Fed did. But what I've been saying all year, and this is literally all year, you go back to April, I've been saying that I believe that the United States is going to experience a recession. Now, we're already in the technical definition of recession, which is 2 consecutive quarters of negative GDP growth, but you haven't had the jobs part of a recession take place. You've never had a recession before, like a real recession. You never had a real recession where you've actually increased the number of jobs, even though you've had negative GDP growth. It's never happened before. We've also never had a global pandemic before. The global pandemic took the economics textbook and it just turned it on its head, right? Like nothing is really making sense with a lot of the things that you typically see. And I've been telling you that the reason why I believe that this will be a mild recession that will come next year when your labor statistics and your economics, and it's not just like the technical definition, but when it's like widely accepted amongst economists that, it's a recession. I think that will come next year. And I've been very, very consistent in that messaging with you here so far this year. But I think that recession will be mild. I think it'll be short-lived. I don't think it's going to be this deep, dark, doom and gloom recession like you saw in 2008 and 2009. And the reason for that, very specifically, is because I believe that the labor market is going to act as a buffer. The labor market has really been a catch-22 because it's so tight. It's so tight because you've had millions of people leave the workforce early because of COVID, and you did not let the millions of people graduate, whether trade school or a regular university, and enter the workforce because the entire workforce was shut down because of COVID. That created a massive imbalance in the labor market. That tightness in the labor market has led to nearly 4 million new jobs being added. Okay. It's very hard to say that as long as you're adding, I think it was like 3.2, I think is the exact number, million or 3.4 million new jobs. How do you say that you're actually in a recession? And when I was talking to Steve and we were going through this interview, Steve said with the data that he's gotten that actually, if it was a regular recession and using just the average, data that you've seen from recessions prior, that we should have seen this year negative 700,000 jobs, where we would have lost net 700,000 jobs. But in reality, we've gained 3.2 million. So nearly 4 million jobs swing. And that tightness of the labor market is causing wage inflation, which also forces into regular inflation. So it's a catch-22 here because it hurts inflation, but it creates a buffer. It creates a buffer for the recession that is to come, right? That's why I don't think it's going to be a bad recession. I think it's going to be a mild one. I don't think you're going to see, like in the 1980s, unemployment went to 9%. In 2009, unemployment went to 9%. I don't think you're going to see unemployment go anywhere near 9%. You know, Jerome Powell on his press conference, the Fed moved their unemployment target to 4.4. Let's even say that 4.4 is low. Let's say it's 5 or 5.2. Still nowhere near 9%. And I mean, you've seen 4.9, 5% unemployment in 2017, 2016, 2018. You've had 4.4 to 5% unemployment. Nobody would consider that a really bad recession, or nobody would even consider that a recession, period. That labor market, I think, is going to be the reason why that's going to keep this buffer. I've been telling you day in and day out that this will be an opportunity for people, because you've never had a moment in time where the S&P 500 has been down 20%, 30% on the NASDAQ. The NASDAQ's already down 30%. You've never had moments in history where the market has been down 30% and everybody has a job. It's just never been seen before. But that's the reality of the situation that you're in. You know, yes, will the labor market soften? Yes, of course it will. Will unemployment go from 3.7? Will it go up? Yes, it will. Will all those job openings start to come down? Yes, it will. It has to. That's what the Fed is trying to do, honestly, to help bring down inflation. But that labor market, the same thing that's pushing wages higher, is the same thing that's going to keep the recession from becoming anything that's going to be similar to like you saw in 2008 and 2009. That is my firm belief. And Steve Liesman, today, one of the greatest economic minds that are out there today, someone that interviews Jerome Powell, members of the Fed, other, just market and industry leaders of finance and economics, reiterated the same exact messaging and analysis that I've been telling you guys for months. And I'm sitting here and I'm like, the markets today are sitting here down near June lows, and people are running around with their hair on fire, but yet they're running around with their hair on fire and their boss is like, hey, put that damn fire out and get back to work. You've never seen that before. Yes, employment, it's a lagging indicator. I get it. I agree with everything that people are saying. Like, oh yeah, but it's the last thing to crack. I get it. It's going to soften, but it's going to soften to a normal level. You still have over 1 million jobs that are still yet to be found in the house, into leisure and hospitality sector. You were 16.2 million or 16.3 million jobs in the leisure and hospitality before COVID. Now you're only at 15 point something, low 15s. It's about a million job difference. So you still have such a strong labor demand in certain areas of this economy that's going to shield you from a really bad recession. And Steve Liesman kind of backed that up. And I've been telling you this is an opportunity, and it will remain an opportunity. Yes, are you going to get more volatility? I told you the markets were going to move to the downside. I told you this a week ago that I expect more downside going into the second half of September, and the markets try to find their footing in October. I still do feel that way, and I believe that. But this is an opportunity. This bear markets are where people make money. They just don't realize it at the time, because this is when stock prices go down. And that's when you want to get involved. That's the opportunity to build wealth. When you look back a couple of years down the road, you're going to be happy that you did, but you don't realize it at the time because it's scary, because you're watching things go down. But that is when the opportunities present themselves. I've been telling you guys this day in and day out. And Steve Liesman backed it up. I got a quick little video clip from you guys here. This is one of the greatest economic minds. This is someone that I respect tremendously. He's on CNBC. If you watch CNBC, you know exactly who Steve Liesman is. Okay? Senior economic reporter for CNBC. Guy really knows his stuff. I value his opinion and his analysis. I watch him every single day. I want to play a quick little video clip for you guys on a quick little exchange that Steve and I had. And I'm telling you again, if you missed the live stream from earlier when I interviewed him. When we're finished with this live, you're going to want to go back and check it out. It's only 30 minutes long, but let's play this quick video clip. I just feel like this is such an opportunity right now with the labor market the way it is. I've never seen us down 20, 30% and everyone's got a job. I just think the opportunity right now for people that want to understand what's happening, because it's not, it's not all the doom and gloom. There's a lot of positives here that we can look forward to. You got midterm elections, you got the seasonal strength at the end of the year. And like I said, if inflation does crack, and if we get some of the things that you had mentioned that help inflation, it can turn out to be a really good opportunity for people that want to get involved.
I'm still investing. I'm not changing much of what I do, which is I take a bunch of money out of my paycheck every month and go for it. And I know a lot of stuff, but I like to say I know enough to be confused. And so I don't think I can time this thing, but I think if I keep investing, I'm going to end up better for it at the end of the day.
And there it is. So one of the greatest economic minds, okay, Steve Liesman, someone who gets to talk to Jerome Powell whenever the hell he wants, right? And talk to other people, telling you right here on our live stream, he's still investing. Right now, he's taking money out of his paycheck every month and he's putting it into his long-term portfolio. So when I see something like that, and I've been telling you guys about this opportunity that's here, and when I talk about this opportunity, I'm not just talking about the opportunity for the long-term portfolio. When you take a look around, you take a look at some of these companies, like you take a look at a Snowflake, you take a look at a Datadog, you take a look at AMD, a Qualcomm, a Broadcom, an NVIDIA. I mean, these are companies that I believe are going to be the next round of unicorns. For the last decade, the unicorns where people were able to really generate severe amounts of wealth is your mega cap tech names, your darlings, right? It's your Apples, your Microsofts, your Alphabets, your Amazons, right? That's where people generated multiple thousands of percentage returns over this past decade. You're not going to get a 2,000% gain from Apple, but there's a whole new round of darlings, a whole new wave of unicorns that are going to come out of this valuation reset. Do you understand that your opportunity to enter companies that could potentially give you the 500,000, 2,000% gains over the next 5 to 10 years is going to come out of this storm when the dust settles? It's going to come out of this storm. And I don't think it's going to be Apple and Microsoft that are going to give you these 2,000% return. That's obviously going to lead the way for the next decade. I think you're still going to get tremendous returns out of those names, and they're some of the safest places to put your money, and it's where the bulk of my money is. I mean, Apple is by far my largest position in my long-term portfolio. I'm very happy and glad that it is, and it will continue to be. But when you look forward for the next, the next cycle of technology, it's going to be cloud computing, quantum computing, AI, cybersecurity. And I took a look around at some of these companies like a Palo Alto, a Snowflake, a Datadog, it's semiconductors like an AMD and an NVIDIA. These are the companies that I believe can get you the 500,000, 2,000% returns over the next decade. And you're going to be able to step in and buy some of these companies at Black Friday discount prices, just like the last time that the stock market crashed and you went into a recession. That was 2008 and 2009. You got to think about where the share prices of Apple and Amazon and Microsoft and Alphabet, where they were in 2008. And think about how scared everybody was to actually buy those stocks in 2008. But in reality, as you look back now, it was the best time in history to buy those stocks. Recessions is what creates opportunity. And when you buy, that's when you're making your money. You make your money when you buy, when you enter. And a lot of people, like I said, you make money in the bear markets. You just don't realize it at the time. That's where you get the term from Warren Buffett, where be greedy when others are fearful, be fearful when others are greedy. And I expect this volatility to still be here for the next couple of months. I think we're getting set up here for another bear market rally, okay, where you've had a lot of these bear market rallies over the last, several months, where you got the big declines, you got this, then you get massive snapback, another big decline, this massive snapback. And the markets to me are really starting to feel oversold. You're starting to get some indications on a technical basis where we're starting to feel oversold. I think that next week, I think next week is going to actually be a positive week. Obviously, this week is deep red for the overall markets. I mean, just the NASDAQ is down 5.5% this week. But I think next week, the markets may actually put in a little bit of a temporary bottom and then actually climb higher for maybe 2 or 3 days. And I think that's going to be a very tradable move for us to capitalize on another bear market rally, which is what we've been doing here all year. It's play the bear market rally and then get back on the short side. And we've been doing that over and over again this year. The opportunity for this in this environment right now is not just in the long-term portfolio. And I see a lot of people are asking me like, hey, is now a good time to be buying the SPY? I think right now is a great place to start nibbling. You know, you're nibbling at 3,600. You're basically right at 3,600. I already bought at this area in June. On June 17th, I stepped in and I bought like 18 different stocks when we were at like 3,640, like 3,640. So like I stepped in and I added my long-term portfolio on this day right here. So I'm already kind of in right at this zone, but there's over the next week or two, I'm going to be adding even more stuff in my long-term portfolio. And I do think that it's a good place to start, getting yourself involved. If you haven't bought anything yet all year, stepping in and starting to buy some, you want to scale yourself in the long-term portfolio stuff, guys. I've done a lot of workshops with our TTG members, like how to build a long-term portfolio. You don't want to try to wait for the exact bottom and try to just pick the bottom and just put all your money in when you think it's the bottom. You heard even Steve Liesman say it just on that video clip. He said, I'm not going to try to time this thing perfectly to try to get the bottom. No professional, right? None of you are professionals that do this for a living. You don't manage hedge funds and you don't manage other people's money, right? This is not what you do for a living. You can ask any person that does do it for a living, that manages billions of dollars. Not one of those professional people are going to tell you, yeah. No, I try to pick the exact bottom and I wait until that bottom is in. And then I say, okay, I'm going to put all my money in now right here on this day. No professional investor does that because they know it's a fool's game to try to pick the exact bottom, because you don't know that the bottom is the actual bottom until probably 3 months after the fact when something has changed. You need a fundamental catalyst to change. So what happened that brought these June lows back into play? Well, very obviously, it was the Fed meeting. When the Fed moved their Fed funds target rate all the way to 4.6, that was significantly higher than what the markets had priced in. That's why the market sold off as aggressively as they did. The Fed also moved their 2024 target up to 3.9, which means the Fed basically told you, hey guys, we're going to raise rates higher than you thought, and we're going to keep them higher for longer than you thought. And that's why the markets have now, everything has just been repriced in. And I came on the live stream that day and I told you guys that changes things. Now the June lows are in jeopardy. And I was going to expect more downside here going into the second half of September. And that's so far exactly what we've gotten. I don't think you're just going to slice through these June lows and you're just going to drop to 3,400. I don't. I think you're going to get this like stair step. If you look at what the markets have done so far this year, every time we've broken the lows of the year, we did it briefly and then bounced. Literally, look at it. So here was your first real low of the year, right? We broke it with the Russia invasion. And then what happened? We bounced, right? We broke it briefly. It wasn't this massive cascading sell-off. And then you go ahead and you take a look at, okay, that was the low, right? And then you broke it. Okay, you broke it. And then you had this little bit of a bounce back. And then this became your low. Right? Then this became your low. And then what happened in June? You broke it and then you got your bounce back. So now this becomes your low. Every time you break the low, you do it briefly. Like it's not this cascading panic sell-off. It's like the low gets broken, it finds its footing, and then it bounces back. And I think you're going to see something very similar to that. Either the June lows hold here today, okay, and then you get a bounce back next week, or let's say Monday you get a gap down, and you're at the June low, you're slightly beneath the June low. I'm going to be getting long on the back of that because I think the market right now is just oversold. And I'm talking to you from a short-term standpoint where I believe that the markets can give you a little bit of a bounce off of this area because I just think that we are, and you're getting a little bit of a bounce now off of these lows. I just think that the markets are oversold. And there's a lot of indicators right now that are telling me that the markets are oversold and we could be getting set up for another one of those bear market rallies And my family and my teaching members and I are going to be taking advantage of it, just like we did the last time that you got that bear market rally. In the very beginning of September, you had that move to the upside. And I think that you're going to get something very similar to that coming up here in the next couple of days. So it's been a wild week. There's no other way around it. It's been a wild year. It's been a wild month. It's been a wild everything. This is the most volatile trading environment that I've ever seen. And that volatility equals an opportunity. And I've been trying to preach this to you guys. I feel like I literally say the same thing almost every single day as I'm trying to drill it into your head that, people will watch the markets today. They'll pull up the news and be like, oh man, the market's, the Dow's down 600-700 points again. What do I do? What do I do? So what? The market's down 600-700 points. So what? Make money on the way down. That's what I mean. Like the opportunity here is not just long-term. It's short-term. Make money on the way down. Play the bounces back to the upside. Use that profit to then roll it into your long-term portfolio when the dust settles, because the dust will settle as it always does and it always has. And that's when you're going to be left with the long-term buying opportunity in what I believe is going to be the next wave of unicorns. I know it's difficult for people to see the forest through the trees. It's difficult for you to see through this storm that's in front of you. It's like when you're in the middle of a storm or you're in the middle of a hurricane, it's hard for you to imagine that the next day the sun's going to be shining and the birds are going to be chirping. But that's how the stock market works. You're in a storm right now, but every single storm that has ever occurred, whether it's a category 5 or a category 1 or a tropical storm, 2008 being a category 5, right? I don't believe this is going to be anything like 2008. I lived through 2008. I was on Wall Street for 2008. I saw what happened in 2008. This ain't it. It's not. And I know there's a lot of doom and gloomers out there that they try to get views, they try to get clicks. That's how they make money. That's not how we make money. We don't make money on clicks or views. We don't even have ads on our YouTube videos. Okay? So we don't make money by clicks and views. It's my job to help provide you with information that can help you make better decisions so that you can make money. That's what matters to us. Because when you make money, that's how the TTG family grows. We've grown the TTG family now to near 10,000 members from all over the world. And we've done it really organically through these live streams, this YouTube channel, and people referring their friends and their family because they're actually making money in a time when the stock market's moving to the downside. A lot of people can't even fathom or understand how could people be excited about what's happening. I'm excited as a dog in fresh cut grass on what's happening because the volatility is insane. The trading opportunities are ridiculous. And then I know that I'm just going to trade my ass off right now and make money during this volatility while it's still here. And then I'm going to be able to take that and roll it into my long-term portfolio at Black Friday discount prices. And doing all of this, members are making money in this environment. If you guys don't believe me, I'll prove it to you guys here. Very simple right now. The members of True Trading Group, if you're on this live stream right now, we got about 1,500 people that are watching this live. If you're a member of TTG, I want you guys right now, literally just type the $ in chat. If you're making money, you guys are becoming better traders because of the TTG platform. The market's down. We're down 20% on the SPY. We're down 30% on the NASDAQ. The Russell's falling. The Dow's down. New June lows, new 52-week lows on the Dow. But yet, look at all the people that are telling you that they're actually making money in this environment. If you can't comprehend how you can make money in this environment, you actually can make more money in a bear market because the volatility is higher. All volatility means is that markets, like the index and overall stocks within them, make larger moves than normal. If a stock or a market's going to make a larger move than normal, that means that there's more. That just means that there's more of a percentage gain potential in one individual trade, because instead of a stock, let's say, moving $5, it's moving $12. Instead of the SPY moving $4, it's moving $9. Like, that's what I'm talking about. And you can see how many members are telling you that they're taking advantage of this opportunity. You don't have to sit back and just be a prisoner of your long-term portfolio. I'm trying to get this point across to you, and it was really reassuring to see Steve Liesman from CNBC kind of reiterate everything that I've been saying to you guys. I don't come on these live streams just for my own health, right? I feel a responsibility to the TTG members and also the viewers of this YouTube channel to provide you with real education, real information, and analysis that is actionable and that you can use to make better decisions for you and your family. Because far too many times Retail investors do the exact opposite of what they're supposed to do. During the COVID crash, what did retail investors do? They panicked and they sold. It's the exact opposite of what you should have done. I stepped in March and April of 2020, and I was buying everything hand over fist. 2021, retail investors go, oh, wow, the stock market's at all-time highs. Must be a good time to get into the markets. Meanwhile, September and October of 2021, I came on this live stream. I told you I was selling my long-term portfolio. Now I'm coming in here today, and I'm telling you guys that I'm looking at this environment right now. I've already added in my long-term portfolio in the 3600s on the SPY, but I still have a lot of cash on the sideline that I'm looking to deploy. And right here is another area where I'm stepping in. I'm probably going to be buying AMD and NVIDIA. I mean, these are some really attractive prices, but even the markets do continue to the downside here, over the next, couple of weeks while we work things out through October. These are stocks that I want to own, and I want to own them for a long time. NVIDIA used to be a $350 stock. It's at $120. AMD was $150. It's at $67. Like, these are companies that these are companies that are not companies that don't make any money. These are companies that I believe are going to be the juggernauts of the next technological boom that you're going to see. It's not going to be Amazon and Apple and Microsoft that are going to give you the 2,000% gains, but I think it will be the NVIDIAs and the Snowflakes of the world that will. I love Snowflake. Still an expensive stock for the environment that we find ourselves in. Even NVIDIA is still an expensive stock in the environment and a raising rate environment that we find ourselves in. But maybe there's a reason for it still being expensive. These are companies that I like for the long term, and I'm going to continue to add during this sell-off that we see in the markets. And I'm going to look back a couple years from now, and I'm going to say, when NVIDIA is back at 250, when Snowflake's at 300, when AMD's at 140, and just literally in the next couple of years, I'm going to be like, wow, I can't believe I got the prices that I got. It's hard for you to see it now because all you see is the panic. But when you see the panic, that's when the opportunity starts knocking on your door. You got a little bit of a move higher today in the VIX. Finally, the VIX is taking part in this move. What's the VIX? The VIX is the volatility index. So as it's also called the fear index, the fear gauge. You hear that. A lot of people give it different names. It essentially just means the higher the VIX goes, the bigger the moves that traders are expecting in the overall market in any one given day. And that usually is that volatility usually comes when markets go down. You don't usually get that type of volatility when markets are at all-time highs. You get that volatility when there's uncertainty in the market and people are unsure the direction the market's going to go, and they think you're going to have these big moves. And you're starting to see the VIX begin to spike. We got up to 31, 32 today. All right. So far this year, whenever the VIX has gotten up to like 35, it's been a short-term bottom for the market. So like all these short-term bottoms that I showed you in the SPY, like all these little bottoms, every time that we got to those bottoms, the VIX spiked up to around 35. You got to like 31, 32 today. I think the high was like 31.89 or something like that. So you got right around 32. So you're getting really close to that point where the markets, to me, just feel oversold, and I think we're due for a little bit of a bounce. All right. Yeah, VIX up 8% today. Yeah, finally. We're finally getting a little bit of that fear coming into the market, and it's needed. You need that. You need that flush out. And this is kind of the flush out that I was talking to you guys about in the lives for the last couple of days. I'm like, I really want to see this flush out. Oh, 32.31 was the high. Thank you, S-Fan. 32.31 was the high. Oh, Adam. Oh, man. Adam Lucchese. Congratulations. Adam Lucchese goes, I closed out my SPY puts from the hospital this morning right before my son was born. 148% gain, and all possible because of what I've learned so far from TTG. Thank you guys so much for the education. Adam, congratulations on the trade. Even bigger congratulations on the birth of your son. Man, what a day. I mean, that's man, you're never going to forget September 23rd, the day your son was born, the day you absolutely nailed those SPY put options. I mean, maybe you'll forget about the put options as time goes on, but wow, what a great day. What a great day. Adam, congratulations, man. I'm so happy for you. I'm happy for you on both ends, man, on the family side, and I'm happy for you on the trading side. Oh, just absolutely incredible. So awesome. Oh, that's fantastic. That makes me feel good. That makes me feel great. So we got a new trader in the making. Born today. The kid doesn't know it yet. But maybe we'll pass on a lifetime membership onto your son. Maybe we'll pass on a lifetime membership to your son. Awesome. All right, let's get over to the overall markets here real quick. What is the VIX ticker? You can actually just pull up VIX is going to be the actual VIX index. Okay, so that'll just be VIX. You also have VXX, which is VXX is an ETN that actually tracks the VIX. You also have the UVXY, which is an ETF that tracks the VIX, but they're not even one-for-ones. The actual VIX itself is just going to be that VIX, and that'll be right there. You see CBOE, Market Volatility Index, VIX, and that's going to be your VIX. All right, that'll be your VIX. Speaking of which, now the VIX is pulling back, right? Because now you're finally getting a bounce back in the market. So the actual VIX, the actual VIX, is not a tradable instrument. You can't actually trade. You can actually trade the VIX. Okay, that's why these other things exist, like VXX, UVXY. Those are tradable instruments. Right. 1,700 in SPY puts today made me green for the month. Way to go, Kev dog. Yes, great job, Kev. Great job, Kev. Really great job. Yeah, guys, there's your bounce. So, I told you when we came on the live stream that I think the markets are oversold and we're due for a bounce. And since I've said that, we've moved 2 points. So since I've said that, we've already moved, no, more than that. We've moved about 3 points. We moved about 3 points already since I said that I think we're due for a bounce. This is a level of resistance that you have to watch intraday, right? This was a tough level for the SPY today. Okay. This was a tough level. These were those initial morning sell-off lows. All right. So if I draw a line across this level, guys, just follow me now. 367.25, right? That was a previous level of support earlier in the day. And then you broke that. We bounced back. It became resistance midday, then rolled it over. It got down to test those June lows. And now you're getting a nice little bounce back off it. And you're trying to get your head back above that resistance level. And that could lead to further upside going into the end of the day. And you may get a close. Who knows? We can get all the way up to 368, 369, folks. If you get all the way up to 368, 369, then my friends, that is going to give you one nice looking hammer tail on the daily chart that puts you right in front of that June low. And if you hammer tail at that June low, then that double bottom gets put into play. And then what I said to you about experiencing a bounce back next week absolutely would be something that I would be looking for. So I'll tell you guys this now. If we close up here, if we close up in this region today, if the SPY closes up here around 368.50, 369, I would actually expect a gap up on Monday. And I think that you actually are back in the low to mid 370s on Monday, as that would give some buyers a little bit of, I'd say a little bit of comfort saying, oh, okay, we tested June lows, they held. And then you get some buying pressure step in there over the weekend, and then futures market open themselves up, and then you get that bounce. I'm going to go live at 8:30 p.m. Eastern on Sunday evening. So you guys want to make sure you tune in then, because we'll check the futures market. We'll see if I'm right. We'll see if I'm right. If I think we get a little bit of a bounce off this area, I think it'll be a tradable bounce for us going into next week. But we'll check at 8:30 p.m. Eastern on the YouTube channel, right? We're going to do it right here. I'll be live. I'll talk to you about where the futures are, what I think that means. Are we getting a gap up? Are we getting a gap down? We'll talk about it all. Okay, we'll talk about all of it on Sunday night. All right, we'll talk about all of it on Sunday night, and I'll go over the game plan and how far I think that bounce could take us. But I do think you can maybe get, I don't know, maybe a 5 to 6 point bounce, maybe, I would say, something like that. And guys, don't forget also, we have a very important meeting immediately following this live stream. Okay, so immediately following this live stream, we're going to do a town hall meeting with all members of True Trading Group inside of the main chat room. Okay. Adam's my business partner and co-founder of True Trading Group. Adam and I have a very important message and a very important discussion and conversation that I want to have with members specifically. It's not something for YouTube. It's really just meant for the TTG fam. So all of my members that are on the live stream right now, as soon as we are done, go right back into the main chat room, and we'll have a very important meeting with everybody. Okay. Yeah, guys. I mean, this is a nice bounce off those lows. I mean, look at this bounce that we're getting. Yeah, I see a couple of people are asking me, Mike, anything to buy for maybe a gap up next week? I'll tell you, depends how we close. And don't forget, you can trade index options for 15 minutes after the close. But if the SPY closes 368, 369, I do think you're good for maybe, the low 370s come Monday. I think that the markets are due for a bounce. And I think we're going to be set up for our next bear market rally. Like we've had a handful of them so far this year. We've had a handful of those bear market rallies this year. And, the last one was 17%. That was a huge one. But they average about 10%. Right? So, 10% move to the upside. That's a big move. Just like, it's a big move. But the trend is to the downside, obviously. But we as active traders, we have the luxury of being short 1 week and then being long the next week and capitalizing on all that opportunity. And we've been doing it. We've actually made money. We've actually made money the last couple of weeks, long and short in the same day. Is actually how crazy that this market's been. Yes, way to go, Mike. Mike Middleton jumped in some SPY calls when I was talking about the bounce. Way to go, Mike Middleton. Way to go, Mike Middleton. Slick little trade there. We'll see how we close out. We've got about 15 minutes to go, a little bit less than 15 minutes. But I think that this continues. Look at the volume coming in. You guys see the volume coming in here right now towards the end of the day? You see all these green volume bars. You see the volume. Those see how much bigger those volume bars are than previously during the day. You see big difference in volume. And that's why I kind of think you're getting some dip buyers are stepping in. They're like, I'll buy in front of those June lows, rightfully so. Those 3600s, if you haven't bought anything in the long term, I think it's a good spot to be scaling yourself in. I did it back in June when we got to the 3600s, and now here we are. We find ourselves back in the 3600s, which in my opinion is a good spot. I think it's a good spot. You don't want to try, even if you have a target, and this is what I want people to realize. When I say, hey, 3600s is a good spot, does that mean that I think that that's it? That today is the absolute low? And do I, even if you think that the SPY is going to go to 3,400, even if the SPY is going to go to 3,200, you have to realize and you have to understand that there's not a right answer that's locked away in a safe somewhere. Everybody has their theories, and their theories are created by a list of different catalysts and a list of different occurrences and a list of outcomes. There are multiple results and combination of results of all of those catalysts that will ultimately change what the end result of where the market's bottom is, which is why no professional will ever tell you to try to wait and pick the exact bottom. They will tell you to have the areas that you want to be a buyer. And when the markets and stocks get into those areas, buy some. And then if you go and I'll have 3 different areas that I'm looking for to be a buyer. The first was 3,800. The second was 3,600. And the last is 3,400. Those are the 3 areas where I really like to be a buyer. Okay. Those are the areas where I really like to be a buyer. But I think there's some other stock. I think there's stocks out there. And there's opportunities out there right now on stocks you guys can buy. So don't wait to try to pick the exact bottom. Take the amount of money that you have and say, hey, this is the amount of money that I want to put in, and just scale it. Scale it. Just say, okay, this is a good area. I'll buy a little bit. And if the markets go lower, then buy a little bit more. Dollar cost averaging on your long-term portfolio is in my opinion, is a good strategy. And you ask any professional, they're going to tell you the same thing, because no matter how bad things get, even in 2008, you guys realize, I'll take you to 2008 real quick. Do you guys realize that in 2008, even if you were super early, that just 1 year later, you were actually up money? Let me show you. So here's 2008, right? This is 2008, the worst single year in S&P history, down 38%. Okay, worst single year in history. Now, down 55% from the 2007 all-time high to the eventual low of 2009. Okay, so about a 55% decline from peak to trough, right? Let's say you were super early and you actually invested right there. Let's say you were super early, right? The markets went down significantly further than where you invested. Even if that was the case, just 1 year later, literally 1 year later, you're actually up money. One year later. And that was the worst recession that we've ever had. Worst recession that we've ever had. So to put things into perspective for you, even if you're early, I mean, look at where the markets were just 1-2 years later, right? That's what I'm talking about the opportunity being when the markets are moving to the downside. And trust me, everybody, the doom and gloom narrative was there in 2008, and that was rightfully so. That was an entire collapse of the financial markets, an entire collapse in the banking system. That's not what you have right now. That's not what you have. Right now, what this is right now is a reset of valuations from free money and 0% interest rates to now expensive money and higher and elevated interest rates, and earnings are being adjusted for that. And GDP growth is coming back down, and you get that recessionary environment. And asset prices need to be revalued and repriced for a 3.5% Fed funds interest rate, because the Fed funds interest rate has been near zero basically since 2008, when the Fed cut rates all the way to zero to spark the economy and bring it out of the 08-09 recession. And there's been a couple times in throughout where they tried to raise rates in there, and then they brought them back down. They raised them and brought them back down. But essentially, interest rates have been zero. And for the first time in a long time, you're going to have real rates being positive. Real rates meaning the Fed funds rate with inflation. Okay, once you factor in inflation, is it still positive? So if you have a Fed funds rate, your Fed funds rate has to be higher than inflation in order for it to be a real positive rate. So if inflation is, let's say, 2%, and the Fed funds rate is 1.5, that's your interest rates are actually negative. Real rates, what they would call, would be negative. So you have to get used to an environment where interest rates are going to be positive, where you're going to have inflation at 2.5 and interest rates will be 3.5. And that needs assets to be repriced. And that's exactly what's happening right now. It's not a complete collapse of credit markets or a complete collapse of the banking system. In 2008, we were 48 hours away from you going to the ATM machine and the bank being like, yeah, sorry, we don't have your money. You were that close in 2008. That was real financial crisis. This is not that. It's not. I don't expect it to get that bad. I don't. I just do not. So let's take a trick check back in here. But like I said, you'll have some people that will, even saying that, you'll have some people that they're going to do what they've always done in history. They're going to say the market's going lower, the market's going lower, the market's going lower, the market's going lower, and then the market will go lower. And then they'll say this, the market's going to go even lower. And then it'll go lower. And they'll say the market's going to go even lower. And eventually it doesn't go any lower. And then it bounces significantly. And then what does that person say? Oh, well, I'll buy the next pullback. And the pullback never comes. And then before you know it, the market has made a 15% bounce, a 20% bounce, and that person never got a single dollar into the market. It's what happens all the time with retail investors. When you wait for the doom and gloom, don't wait for the doom and gloom. Don't set your thesis on everything that could go wrong, going wrong. Something that I was taught at a very young age, and it's been amazing advice, from an investing standpoint, and I'll share with you. Things are never as bad as they seem, and they are never as good as they seem. It's usually somewhere in the middle. There's only a couple times where, the absolute worst case scenario could happen. But most of the time, if you have 5 different catalysts, maybe 3 go wrong and 2 go right, 4 go wrong and 1 go right, or 3 go right and 2 go wrong, or vice versa. It's usually never as bad as you think. It's also usually never as good as you think. Keep that in mind. And that can help you keep a very level head when it comes to making long-term investing decisions. Otherwise, you just expect the doom and gloom on the downside. And otherwise, you expect the markets to just continue to rally to the upside to unrealistic levels, which is what happened to a lot of people in 2021. 2021, people just couldn't admit that stocks were going to go down. I told you guys last year, the market's going to crash next year. These are not sustainable levels. You got to sell. And I sold in September and October. Yeah, the markets went a little bit higher in November, December, so I didn't get the top. But I'm not trying to get the exact top. You don't try to, just like I'm not trying to catch the exact bottom. So that's my advice. It's a piece of advice that I've been given, and it's worked for me. Talk about the Goldman Sachs. Yeah, Goldman Sachs adjusted their target to 3,600, which is basically where we're at. Goldman Sachs is adjusting their earnings to 15 times, which is, I think, a very realistic number and a fair value number. Earnings got all the way to 20, 22 times last year. That's crazy. You're at 18 times, and Goldman Sachs is adjusting earnings down to 15 times. 13 times is like deeper recession type of numbers. 15 times is more of like lighter recession and more of like fair value, I would say. 16 times I think is fair value. So Goldman Sachs adjusting to 15. So it's like fair value minus a little bit, which would be right in line with what I think you get next year, which is a mild recession. You get a mild recession next year. And I think inflation comes down. I think inflation comes down faster than people think at the end of this year and the beginning of next year. Not to say I think inflation goes back to 2, but I don't expect inflation to stay at 8%. I think inflation, is going to crack here at the end of the year. You're seeing like the Zillow rent index that has rolled over. Rent prices has been a major thorn in markets in inflation side. Rent has been the stickiest. Shelter has been the stickiest area of inflation. That has rolled over the Zillow rent index. So you have a lot of things that are pointing data that I'm looking at, a lot of things. And I'll be the first to admit, I was surprised by the last CPI number that came out, 8.3, much higher than I thought. I thought it was going to be like 7.9, maybe 7.8. No analyst had 8.3 as their expectation, not one. But it came out 8.3. So the whole street was surprised at the last inflation number. So, with that being said, as I look at other areas of the market and other areas of inflation, I think that you're going to see inflation, crack at the end of the year. And then maybe the Fed's target of that 4.6 of next year, maybe that target starts to come down. And if that target starts to come down, the markets will start to bounce back. If the Fed's target of 4.6 next year starts to move back down to 4.25. And that's all it takes. That's all it takes. We got a minute to go here, folks. And it looks like we're going to get this closed at 368. I would feel better if we got like 369 for that gap up tomorrow. But still, nonetheless, a nice little recovery from today. Things got pretty ugly there in the last 2 hours, but then a real nice recovery here going into the close. And that gives me, I think the markets bounce next week. And I think you're going to get back up into the low to mid 370s next week. And that'll be a tradable bounce that we can look for. And I would look for relative strength. Look at the stocks that did not participate as much to the downside over these last 3 days. And those are going to be the stocks that I'm going to look to be long next week, if and when the markets begin to bounce and begin to recover. Okay. So that's what I'm going to look for Monday. But again, Sunday, the markets are closed. There's the bell. Sunday at 8:30 p.m., I'm going to do a live stream right here with you guys. And I'm going to give you my entire game plan on what I'm expecting. We'll look at the futures market, and I'll give you the exact stocks that I'm going to be buying on Monday to try to catch a little bit of a bounce for next week. I'm going to do some work over the weekend. I'm going to find the relative strength in the names, and I'll give you the whole game plan on Sunday. So subscribe to the channel now. So turn on your notifications. Make sure you set your reminders. You'll never want to miss out on any of the things that we put here, that I talk about here on these live streams. Guys, also don't forget, members, we have a very special meeting in the main chat room immediately following this live stream. It's going to start in 15 minutes. So make sure that you guys are heading into the main chat room. I would like to see, though, first, we got about 1,500 people on the live stream. I'd like to see how many of you are not members of TTG. How many of you are not a member? Type the letters TTG in chat right now, actually, guys. If you're not a member, type the letters TTG in chat right now if you are not a member of True Trading Group. Don't be shy. I want to see how many people are not members of the TTG family. Just go ahead and type the letters TTG inside of chat right now. Let's see. Who do we have? We've got Wealth Thinkers. We've got Joe, Frank, Taral, George Ryburn, Ram Sanjay, Suzanne Paper, Light B, JB, Aaron, Surya, Colby, Terrell, Patrick, Lewis, Better Together, Nathan, My Carlo, Brett Maves, Maury, Lexi D'Angelo, Flow Me. Cool, guys. A lot of people that are on the live right now that are not members of True Trading Group. Listen up, guys, very carefully. I want to make sure you guys are all aware, because I'm doing something, I'm going to be a nice guy for a little bit here. Because markets really sold off today. I know these are the days that people freak out. These are the days that people panic. Okay. The Dow made fresh new lows on the year. The Dow broke those June lows. I understand the anxiety level that people sometimes have. And I feel like you guys don't have to feel that way. I'm not scared. I'm not nervous at all. Really not. I'm actually really excited. I pray for times like this because I'm selfish. I pray for times like this. I want to trade the move to the downside, and then I want to buy these stocks. Everyone's like, the SPY's going to the, okay, great. I'm going to buy it when it gets there. The SPY's got great. I'm going to buy it when it gets there. You want the market to go down so you can buy stuff in your long-term portfolio, because so many of you missed 2020. I know most of you missed 2020. And you're going to get a chance to actually buy stocks now at fair value prices. Most of you missed 2020. You got involved in 2021, and the prices you paid in 2021 were absurd. They weren't fair value. They were extreme premiums. They were not fair value at all. They were unsustainable prices, and a lot of people got stuck with stocks at prices that they're not going to see for a while. Now you're going to get an opportunity to actually buy stocks at fair value. Very, very different scenario than what you saw last year. That's why I'm excited for it. But you guys, your window of opportunity is running out, right? Your window of opportunity is running out because it's not going to stay like this forever. So I'm going to actually give you guys a solid. I was going to move the price of the membership up going into tonight and going into the weekend. I'm going to leave it for an extra day for the weekend. Okay. Right now, if you guys go to ttgoffer.com and you enter the coupon code TTG121, you will get a 45% discount on the membership, which drops the price all the way down to just $12.12. So I'm giving you $1,000 off. I don't want anybody to be deterred from getting access to this education, getting access to this platform, so that you actually have a real understanding of what's going on in the markets. Okay? So you actually have a real understanding of the markets. All right? So I'm going to keep it at that 12.12. You just have to go to ttgoffer.com. Okay? Type the coupon code TTG 121. The price will drop to that 12.12. Okay, guys. Oh, I'm sorry. Before I go any further, we have to welcome Jim. Sorry, guys. We have to welcome Jim. Jim is the newest member of the group. We just did get a new member here. Jim, welcome to the TTG family. Everybody welcome Jim. Jim is the newest member of the group. Everybody welcome Jim. We had 17. We now have 16 that laptops that have to last us the entire weekend. All right. So there's 16 laptops available for the entire weekend. So the next 16 people, as long as you see a laptop inside of your checkout cart, when you go to ttgoffer.com, you look up, you see a laptop in your checkout cart, then that means you're getting one of the 16. There's 16 of them for the weekend. All right. And that price will stay at $12.12 until Sunday at midnight. All right, and then don't forget, I'm going live Sunday at 8:30 p.m. Eastern. Okay. Going live Sunday at 8:30 p.m. Eastern time. So you guys go to ttgoffer.com, enter the code TTG121. You get the 45% off. You get the free laptop. It's free. We even cover the shipping. We ship anywhere in the world. Doesn't matter where you live. You can live on, as long as you live on planet Earth, we'll get you the free laptop. We have members from all over the world, literally all corners of the globe. Okay. So again, I'm going to leave this $12.12 price until Sunday at midnight. One more chance. Give you guys the opportunity to come in here and grab the membership and get access to the platform. It is a platform. Understand it's a platform. You get access to the entire curriculum. It's not, you don't pay extra for courses and tools. Pay one price, get access to everything that it is that we have. It's our 18 course curriculum. You get $5,000 worth of Tinga, TradingView, Quote Media, Trade Ideas, Polygon, ETNA, all this stuff. These tools would cost you $5,000 a year if you went to the companies directly. It's free with your membership. We spent years building relationships with those companies and working out deals with them so we can put their products in the TTG platform so that you don't have to pay for them. It saves you about $5,000 a year from having to pay for all of those tools and resources. And it's important you have access to them, and it's important you understand how to use them, because that's what professional traders are using, right? Professional traders are using scanners and they have different news feeds, and they have dark pool data and options flow and unusual options activity. They have access to analyst ratings, insider buying, insider selling, and all this stuff is going to be something you have access to when you join the TTG platform without having to spend another dollar for it, aside from the $12.12. You're going to get all the trade alerts from the mods and I that have been able to maintain a cumulative win rate of around 80% for the last 2 years. And of course, the double your money back guarantee. Yes, I did not stutter. I offer double your money back guarantees when you join True Trading Group. That's how confident I am in the platform that we've created. It's quite simple. You have 12 months, go through the courses, pass the quizzes, attend the study group. And if you still fail to make the $12.12 back at least once, I'll give you double your money back. $2,424, what I will hand you back if you fail to make the $12.12 at least once during your membership after completing those 3 things. Now, I don't think you're going to need the double your money back guarantee, but it's there for peace of mind, and it's there to protect you and make you feel better. I don't think you're going to need it because the numbers speak for themselves. We've only had to refund roughly 2.6% of our members since 2016. We have a retention rate, meaning how many people renew their annual membership, is 78%. We're also 5-star rated on Trustpilot with over 1,750 reviews. So based on what members tell us, the reviews they leave, based on the refund rate of 2.6, and based on our retention rate of 78, I can very confidently sit here and tell you that I know that TTG has worked for thousands of people. And if you put forth a little bit of effort, I think it can work for you as well. And I'm willing to back that claim up and back up that thought by putting my money where my mouth is. And that's why I'm going to offer you double your money back. So the next 16 people that go to ttgoffer.com, enter the code TTG121, get the 45% off. You're going to get the free laptop as long as you see the laptop in your checkout cart, and you're going to get your double your money back guarantee. Anybody that has a question about the membership, or if you're a current trial member, a previous trial member, or a previous annual member, and you guys want to get access to this discount as well, do not go to ttgoffer.com. Rather, send a text message to 786-505-4049. Again, the phone number is right there at the bottom of your screen, 786-505-4049. You guys can send a text message to that number right now. Any questions that you have, or if you're a previous trial, or previous member, you guys text that number as well. We will hook you up with that discount, with that laptop, and make sure that you guys get started off on the right foot. All right. Again, it's just for the next 16 people, though, that use that coupon code and go to ttgoffer.com. All right. Let me actually show. Oh, we've got to. Okay. No. All right. What I want to do here now, guys, is I want to show you the actual platform that is True Trading Group. Okay. And so anyone that's not interested in a membership at all, you guys can sign off the live stream. Okay. You can sign off the live stream if you're not interested in a trial at all. What I'll do now is I'll actually show you the platform so you can see the tools and resources and everything that you get access to. Okay. So guys, obviously when you join, you're going to get our chat room. The chat room is where the mods and I share our screen. We're live on the mic. We're calling out our trades in real time. We're with you from pre-market, 7:30 a.m. Eastern. We open up. We're with you all the way up through until the market close each and every single day. You're not just left to fend for yourself after an hour or two. We're with you for the entire day. You're also going to be able to use our mobile app. The mobile app is available on iPhone and Android. It lets you guys be connected to chat even if you're not in front of your computer. So if you work a busy full-time job, as many of our TTG members do, there's nearly 10,000 of them, use the mobile app. The mobile app will let you see the screen share, listen to the audio analysis, and also get real-time push notifications whenever a moderator enters or exits a trade. And that's how you guys are able to take advantage of everything that it is that we're doing in chat, even if you're not in front of your computer. You also get 2 private study group sessions with one of our pro traders to ask questions and really speed up that learning curve so you can get started off on the right foot. You get Benzinga Pro's real-time news feed and Squawk Box feature, something that would cost you over $1,000 a year if you went to Benzinga directly. It's included with your 1212 membership when you guys join True Trading Group. You get TradingView's premium charting software. That'll cost you around $600 a year. It's free with your membership when you join True Trading Group. The Trade Ideas scanner is an industry standard scanner. Make sure you always focus on the hottest stocks during the day. That'll cost you a few $100. It's free with your membership when you join True Trading Group. You've got ETNA's simulator, let you trade stocks and options with fake money so you can practice implementing what you're learning in the courses. This will cost you just under $1,000 a year. If you went to ETNA directly, it's free with your membership. We've got a proprietary scanner that lets you create custom scans. You get dark pool data, unusual options activity, and options flow. Again, that'll cost you hundreds of dollars a year. We have it free with your membership when you join the TTG fam. You get a trading journal that tracks your trading and gives you statistics so you can actually see your trading broken down by the numbers so you can know where you need to make improvements. A social sentiment scanner will go through Reddit, Stock Twits, and Twitter and tell you what ticker symbols are being mentioned most on social media so you can stay ahead of the crowd. Analyst ratings on any stock you're interested in so you can see how many analysts have a buy, sell, or hold rating on a particular name. Insider buying, insider selling, short data, it's all included, guys. And then every day we publish a watch list. We give you guys the stocks we're looking at with a game plan and how we intend on trading those stocks. And then you get the courses. The courses are a simplified version of what I learned working at the fund in New York. There's beginner and foundation courses, advanced courses, options, swing trading, trader psychology, crypto, futures, you name it, we've got it, all in text and video. There's also a video library that's got 300 hours of workshops like how to grow a small account, how to build a long-term portfolio, how to resist FOMO, how to trade while working a full-time job, just to name a few. And you guys can actually attend these workshops live once you become full-time members of True Trading Group. Guys, listen, it's time you invested in something real, especially during a time like this. Don't just sit back and be a prisoner when you watch the markets go to the downside. Learn how to make money in a down market. Then roll that money into the long-term portfolio when the dust settles, as it will. Take advantage of the opportunity. You missed it in 2020. You missed it in 2018. You missed all those market sell-offs, all those bear markets, all those more than 20% declines. If you missed them, don't miss another one because you got one and you got another one happening right before your eyes. All right. I can't guarantee you're going to be successful just because you joined True Trading Group. But what I can guarantee is if you don't make the 12-12 back after going through our courses, passing our quizzes, attending our study groups, if you don't make that back at least once, I'll give you $2,424 back. That's the deal when you join True Trading Group. I have no problem offering you that. If you have any questions about the membership, send a text to 786-505-4049. As long as you see a laptop, you're getting one. You don't have to enter your address. You'll get a welcome email after you join with instructions on how to claim the free laptop. Okay, you don't have to enter your address. All right, guys, that's it, folks. Thanks for joining me. My TTG fam. Oh, Francis, welcome. Francis, welcome to the TTG family. Now there's 15 of those laptops remaining. Everybody welcome Francis, newest member of the group. Guys, that deal is good until Sunday at midnight. So if you guys are watching this live stream later, as long as you see a laptop at tgdoffer.com, that means you're getting one. Use that coupon code. And then make sure you set your reminders for Sunday at 8:30. Okay. Now listen, everyone that is a member, get into the main chat room right now. Adam and I have a very important conversation and discussion we want to have with you guys. TTG fam, head on into the main chat. My new TTG family members, welcome. My non-members, make sure you just subscribe to the channel, smash that like button, turn on your notifications, take advantage of this deal while it is still here. Learn how to make money in a down market, folks, because now's the time. All right. Thanks for joining me. Smash that like button, subscribe to the channel. I'll see you guys all this weekend. My TTG fam, get your butts in chat. I'll see you guys all in just a moment. Thanks, guys. Take care. And if you haven't seen my interview with Steve Liesman, go check it out. It's on this YouTube channel. See you guys later.